Opening drives are the most riskiest type of setups out there, but they are the highest paying setups in the shortest period of time. Now, a lot of you guys asked me to break down how I take the opening drives, what I look for. So in today's video, we're going to break exactly that down. So our main focus today is going to be how we identify opening drives. From the very start to how you manage the trade, planning it, executing it, how to adjust the trade, pretty much the whole 9 yards. Now, for those of you who don't know what opening drives are setups that you take right at the open. But most people tend not to do well on them because they don't know what they're looking for and why they're taking the trade. A lot of the times they'll see a stock just taking off or selling off very aggressively at the open, and most people end up chasing these trades. Now, if you're not familiar with how to take these trades, most probably you're gonna get burned and you're gonna end up losing a lot of money. Now, I've taken my fair share of hits from these opening drives because when I first started trading, I started off trading with penny stocks, mainly biotech companies. They had news, catalyst. I had to do a lot of research in order to take them. Also, reading the tape was an essential part of taking these opening drives. So I had to learn a lot before I could actually take some of these setups that are working out very well in today's market in options. And mind you, it took me almost 2 to 2.5 years to fully get the hang of it, from going from penny stocks to going into options, and then implementing everything that I had learned into trading options. Now, every single opening drive, it requires a lot of pre-planning. All right, so I'm gonna give you guys 4 things that you need to have before you jump into taking opening drives. The first thing that's going to be is your pre-planning. Your pre-planning is going to come in from your weekend charting, overnight charting, having key levels, right? This is going to help you find your entry points. Second thing, which maybe should be the first, is going to be your stop loss. Before you enter any of these trades, not just the opening drives, it could be break and retest or any other setups that you guys are looking to trade. Stop loss is a very, very important part of that setup because a lot of people struggle with closing their trades when they're wrong. So if you don't have this beforehand, when you're in the trade, you'll easily be able to convince yourself to hold that trade longer. So it's much better to know when you would cut the trade before you actually enter the trade. Third thing is going to be your position size. Because these trades carry a lot of risks, you want to cut your position size down slightly from your usual position size. So if you're usually going in with $2,000 for opening drives, I would suggest cut it down to 50% or 70%. So 1,000 to 1,200 should be an ideal position size for someone who's used to $2,000 position size. Fourth thing is execution. All right, a lot of people are not great at this. This could be because of many factors, right? You want to make sure that you have the best execution out there. You can practice on demand, which I'm going to use today to show you guys a setup from the past that we've taken. But if you're not good at execution, especially jumping in, and you don't have a pre-plan of where you would jump in, what the stock needs to do in order for you to jump in, you're not going to do well in these opening drives. And especially if you're a new trader, I would highly suggest stay away from opening drives. Focus on break and retest, opening ranges, reversal trades. Those will tend to help you get better at trading, and in the long run you can switch over to opening drives, but I wouldn't suggest starting off now. This is more of an advanced trading strategy that not everyone is able to get the hang of. So let's get into it. I'm going to show you guys a chart. We're going to start from the beginning and I'm going to walk you guys down from what I would do if this was happening the night before, then what I would look at the next day pre-market. All right, so this is the on-demand feature you guys can see here. So this is allowing us to go back in time on a certain date and pretty much replay what happens that particular day. Schwab and Thinkorswim, they have this feature. Also, I'm pretty sure TradingView has it as well, and you guys can implement it. This is a good way to kind of understand what happens around certain levels, or if your strategy is working or not. You can kind of pretty much go back in time and try it. So first thing you guys want to look for is if there's any inside days, right? So what an inside day essentially is that when you have the previous daily candle and the current candle, the new forming candle is within that range. Meaning if you guys see this green candle, this was almost in an inside day, right? The low of the day was around right here, and the high of the red candle was right here. So we couldn't really break out of that range. Typically, when we see a break out of that high and low of the previous day, it usually has a very aggressive move, right? So the first thing we're gonna do is identify those in our pre-planning phase. So once we have these two levels, now the next thing you want to do is just find your support and resistance levels, and then we move on to pre-market. So now we're going to fast forward. Let's say we go into the next day. What are we looking for? We need to have some sort of a catalyst, obviously, for this stock, right? That's the first thing. So if the stock doesn't have any catalyst that is supporting your thesis, then most probably taking an opening drive on that is not going to be high probability. Second thing is you want to look for some sort of divergence or how well the stock is reacting to the overall market. So I like to use SPY as my main indicator, right? So if SPY is kind of doing something like this, where you guys can see if we compare both of the charts, right? SPY is looking very weak and HIMS is actually looking very, very strong, right? So that tells me that there's a lot of divergence in HIMS where buyers are trying to hold this stock up versus where overall market might be going the other direction, right? So that's a good indication for us. Now we go with our pre-market planning, right? The first thing we want to know is where we would be entering, or where is our trigger to enter point. So first thing we're going to do now is identify that pre-market high, right? So we're going to go here, identify our level, which is around 47.40. This is now our high of the day. So what I'm going to do is I'm going to change this color. So I'm just going to change this to red. So we know this is the pre-market high. This is our key level coming in from the previous candle's high. All right. Then we have our pre-market low, which is roughly around 46.50. All right, so we're gonna change this color also into purple. All right, I'm gonna tell you guys why. Second, now we're going to zoom out a little bit and look at the last couple of days, right? What level has been very strong? Now, this is an intraday level, and I'm gonna tell you why this plays a big role. This is more of a mental thing for me that helps me. So I see we had this day where it rejected 46, right? You guys can see right here. We retested, rejected again. So I'm just gonna draw a line here and I'm gonna give this a green color. Okay, so go across. So we have, and now rejection, 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 breakout, retest, and then it's holding very well. So this was at one point a resistance. Right now, this is turning into a support for us. So now we have these lines, right? So now let's break each of these lines down. So this is a potential reversal point, okay? If we give up 46, most probably this can continue on the downside. All right, 46.50, this purple line is pre-market low, and we're gonna use this as our stop loss. Second is, this is the pre-market high. All right, so pre-market high is going to be our range for our trigger to enter. All right, so this is going to be between 46.80 and 47.40-ish level. This is our trigger to enter zone, let's just call that, right? So typically what I look for in these type of setups is when the stock opens up, we obviously first want to see a little bit of a pullback because I don't want to jump right in, because if I'm jumping right in and there's not that many confirmations, typically we don't see a follow through. Usually where we have a high probability in these opening drives is when we obviously, push higher in the pre-market and then we pull back a little bit and then we go towards pre-market high. Usually here is where we have a much higher probability of continuation. Also, it allows us enough time, 2 to 3 minutes is more than enough for algos, hedge funds, and people who, swing trading, for them to take their position out and reposition themselves. And this gives us enough time. So if we see a strong hold around these pre-market lows and previous day's key levels, right, which is our potential reversal point, this gives us a very good idea that, all right, this stock has a very high chance of continuing. All right, so this is the phase one of our trade, because now we know this is where we need to enter. This is where we have our stop loss. The second phase is going to be managing the trade, which obviously comes after you execute. Let's look into that now, right? Purple is our stop loss. We're gonna enter over 47. This is our trigger to enter zone over 47, right? So I'm gonna highlight this 47 because 47 shows a lot of candles closing under. So I wanna see buyers holding over 47 for me to jump in with a starting stop loss of this 46.50, 50-ish level, which is gonna be our stop, right? So what we're gonna do is I'm gonna just open us up at 9:30 here, hit play, and you guys see this pullback. Let me just start a little bit earlier because I want to give the level 2 and time and sales time to start moving so I can show you guys exactly what to look for, right? So 46.50 is a pre-market low. So typically what you want to see is within this zone of your previous day's key level that you might have, which was a previous support or resistance, which is now the opposite. You want to see if there's buyers or sellers coming in. So in this case, because we're trading more towards the upside, we want to see strength from buyers here holding above our stop loss point. So we want to see a pullback. A pullback is going to be perfect, right? Because if it pulls back into this zone and we see buyers being more aggressive, we see a lot of buying happening, this is going to ultimately tell us that, all right, if it holds over 47 after the first 2 minutes are over, all that craziness is out of the way from the market, that's where we're going to jump in. We're going to start our stop loss right here, and then we're going to let that trade play out until we get stopped out. Now, these 3 lines are going to be very important down the line. But anyways, you guys see this 46.60, very strong buyers versus here the sellers. Even though we're pulling back, right, the strength isn't there. There's more imbalance coming in from the buying side than there is from the selling side, which is a good sign. But again, we're going to jump in once we start seeing majority of the holds over 47, right? This is your trigger to enter that particular trade. So again, you want to give it a minute, anywhere from 1 to 3 minutes at the open when you see a pullback like this, because this is going to give you the best information in terms of buyers, sellers, if your key levels are good or not, if that side is strong, or if market is now turning towards giving this trade a better divergence. As you guys can see, this is where you would take the trade. Starting stop loss 46.40, because we are now, the tape is holding over 47, right? At this point, we're going to leave our stop here. We've entered the trade. Unless if we close under our stop, we are not closing this trade. So I'm going to fast forward a little bit because otherwise we're going to be here for a while. All right, so you guys see how we are starting to break out of our pre-market high, right? At this phase of your opening drive setup, you take that purple line, which was your initial stop, right? And we're gonna increase our stop to what was our trigger to enter point. That's going to be your new stop, right? So we're going to grab this stop loss and we're going to increase it to that 47 level. Now, this is our new stop. As price starts to push higher, you wanna start increasing your stop, because what that's going to allow us to do is now, when your stop loss was right around 46.50, for example, right? If you're wrong here, you'll probably take a hit of 10%, right? If once the stock starts to move in your favor on opening drives, you increase that stop loss. Now you're going to be most probably right around the break-even price, right? The second important level is going to be that pre-market high, right? Because we had an early entry into our opening drive. Now, once we are breaking and holding above that, then you can increase your stop to that pre-market high. Now at this point, even if you haven't scaled out and you're still holding some of your trade, and if you're still holding some of your runners, at this point you're going to have slight profit from that remaining position, right? So I'm going to put this right back to our pre-market low level, and we're going to fast forward it to 9:45. Now we're going to use the purple as our stop, right? So we initially pushed it up to 47 to 47.50, which is our pre-market high, to now 48. Now, the point of increasing your stop loss is going to help us minimize if this was to pull back all the way to 47. We don't want to break even after holding such a perfect setup that is consistently going in our favor, right? We want to make sure that we are protecting our downside. So there's 2 ways, right? In my opinion, you want to implement both of these ways. One is increasing your stop loss. Second is scaling out of your position. Taking a little bit off the table is going to help you hold your winning trades longer. Basically, once I'm out 50% of my trade, I tend to hold the remaining position for a much longer period of time. Then until I get stopped out, I am not jumping out of the remaining position. All I do is keep increasing that stop loss, and the moment that stop is hit, that's when I exit the trade. Now, even holding 30 to 50% of your remainder of your position, if your entry point is around 47, and let's say this thing has ran almost 3 points, percentage wise in options, this is a great trade, right? This generated us almost close to 130%, right? These type of trades, once you have a perfect entry, all you need to do is increase your stop loss once you've mastered scaling out, right? So for me, I get more comfortable after scaling out 50%. For you, it might be scaling out 80% and then holding 20% as your runners and increasing your stop loss. It's all about practicing, and practicing, right? The more you let yourself stay in the winning trades, the longer you'll be able to hold them. And that's going to be key to having higher returns in taking these opening drives. Now, I know I threw a lot of things at you guys right now with level 2, time and sales, and how to manage the trade. What I want you guys to just focus on for now is how we find these opening drives. I'll make a few other videos for you guys that will focus on how we manage the trade properly down the line. But I'm very curious to know how many of you guys have tried trading opening drives and how well did they work? And do you think this video will actually make an impact in you finding better opening drives? I'll see you guys in the next video.